We'll get started. Hi, can I have your attention, please? I'm Mark Lifsher, Communications Director for State Treasurer Chiang. I'm glad to welcome you to this press conference on Wells Fargo. And without further introductions, I'll bring in Treasurer Chiang.
Thanks, Mark. Good morning, Senator Dodd, my Treasurer Cisneros, Lee Harris, members of the news media, Richard Holliber. I have important and urgent things to say about Wells Fargo. But before I start down that path, I want to pause here for a moment to express my utter heartbreak and deepest sympathies for your constituents in the North Bay, Senator Dodd, and for many others across our great state. We send our prayers to all Californians who have lost loved ones and all of those who have endured unimaginable personal loss and suffering as a result of these devastating fires that still burn. The smoke that lingers in the air here today serves as a vivid reminder of your suffering, and our prayers and thoughts are with you. With that, I am now announcing that the sanctions that I first imposed on Wells Fargo in September of 2016 will be extended for at least another year. Many of you will remember that I originally put Wells Fargo in the penalty box in response to revelations that it fleeced customers by opening millions of bogus accounts. It was imperative that we learn the answer to one important question. Could Wells Fargo identify and eradicate the root causes of this widespread and recalcitrant culture of customer abuse and restore public trust? The sanctions barred Wells Fargo from participating in their three most highly profitable lines of business with my office. I put a freeze on investments by the Treasurer's Office and Wells Fargo Securities, as well as on the use of the bank as a broker-dealer for the purchase of investments, and on the appointment of the bank as a managing underwriter in bond sales where I select the underwriter. I sought real accountability and lasting reforms that are in keeping with the bank's lofty promise to be on the side of its customers. Now, during the course of my review leading to today's decision, I was pleased to note Wells Fargo has been responsive to some areas of concern raised by my office, including the separation of the positions of chief executive and board chair, departure of 3 of 7 board members, the rehiring of 1,780 employees wrongly terminated, and the clawback of $70 million in pay to top executives. But I also weighed these positive steps against a balance of aggravating factors. There has been an alarming drumbeat of news reports of egregious, unethical, or illegal actions by the bank over the past year. In 2016, when federal and local regulatory agencies flipped the light switch to expose the millions of unauthorized deposit, credit card, and debit card and online banking accounts, few would have suspected that this one cockroach portended a much more aggressive infestation. Yet over the past 12 months, other problems scurried out of the dark corners within Wells Fargo. The number of phony accounts multiplied from an initial 2 million to now 3.5 million. An estimated 800,000 customers were forced by the bank to buy lender-based car insurance they did not need. And the bank agreed to pay $108 million to settle a lawsuit claiming it overcharged military veterans under a federal mortgage refinancing program. Throughout this series of scandals, Wells Fargo has been far too opaque and evasive in responding to inquiries of customers, congressional and state lawmakers, and my office. This bank failed to provide me with the evidence on a quarterly basis that it is complying with the terms and conditions of consent orders and settlements with the Comptroller of the Currency, the Consumer Financial Protection Bureau, and the Los Angeles City Attorney, stemming from the original discovery of the 3.5 million bogus customer accounts. It also failed to provide me with a granular accounting I asked for more than 12 months ago on the number of California consumers that were harmed, the concentration of those customers geographically, and the status of the bank's efforts to resolve their grievances and make them whole. Additionally, the bank ignored the inherent lack of fairness of its forced arbitration policy and also declined to support our efforts to see that practice end. So Bill Dodd and I, whom you will hear from in a moment, worked with consumer advocates, some of whom are here today, thank you, Richard, to ensure banks no longer are able to force customers they forced into arbitration, denying them from their day in court. Lastly, the wheels came off the bank's trademark stagecoach because of the bank of directors' failure to provide real leadership. Board members appear to have simply abandoned or dodged their fiduciary responsibility to protect the company's reputation, the value of its franchise, its obligations to shareholders, and most importantly, the personal savings Californians entrusted to it. I called for the ouster of 7 board members on whose watch these ethical lapses occurred. 3 are departing, but 4 still remain. Absent their neglect or worse, willful encouragement, the systemic corruption and venal abuse of customers that has now become part of the Wells Fargo brand would not have occurred. Each bears responsibility. I again call for the remaining 4 board members to leave. In sum, the balance of Wells Fargo's aggravating factors far outweigh their mitigating actions. This raises the vexing question, is Wells Fargo too big to succeed? The collapse of Lehman Brothers, Countrywide, and Washington Mutual during the Great Recession disproved the theory that large financial institutions had become so important to our nation's economic health that they were too big to fail. By too big to succeed, I mean to ask whether Wells Fargo has become so arrogant as to believe it can walk in between the raindrops of scrutiny and accountability. Is it so unwieldy as to become resistant to change? Has it become so deaf and blind to its own follies and missteps that it believes it is somehow the victim rather than the abuser? It is no wonder some are calling for the breakup of the bank, and others are demanding that its national charter be revoked, while still others have demanded that its leadership structure be completely dismantled and replaced. As you know, I too have questioned whether Chief Executive Tim Sloan's 3-decade tenure within Wells Fargo makes him the change agent leader that Wells Fargo so desperately needs. In the coming months, I will be looking to Wells Fargo to comply with my long-standing requests for proof that it is achieving much-needed reforms, that it is seriously cleaning house at the board level, and that it is making account holders whole. How they respond and the urgency with which they do it will inform my next steps. Because so many additional questionable practices have come to light, I am now also calling on federal regulators to investigate the activities of the other lines of Wells Fargo's businesses, including divisions within the companies that do business with the State Treasurer's Office and other governmental entities. Wells Fargo committed fraud against millions of its customers. Might it do the same with its government and public sector customers? The hundreds of public agencies that depend on the bank for their borrowing and investment needs deserve an answer. See, these are the very things I detailed in a letter sent today to the Wells Fargo Board of Directors. I expect Wells Fargo's full cooperation and support in all of these matters. I am still seeking the answer to a question I posed to Wells Fargo 1 month ago. How can I continue to entrust the public's money to an organization that continues to hold such low regard for the legions of Californians who have placed their financial well-being in their care? With that, I want to introduce Senator Bill Dodd.
Thank you very much, Treasurer Chiang. I really appreciate your support and help and co-sponsorship of SB 33. Before I start my comments, though, I too would like to, frankly, this is as clean an air as I've breathed in the last 7 days. Thank you. I want to first thank, the important people as the first responders and the overwhelming outpour of support that we've received in Napa and Sonoma counties over this past week. The fire victims are certainly in our thoughts and prayers, and the safety and recovery of our region remains paramount. But we're here today because of the Wells Fargo fraud scandal. Over the last year, as we just heard, this scandal has continued to balloon. Warren Buffett was correct when he said, "There's never just one cockroach in the kitchen when you start to look around." At a time when some in D.C. want to roll back consumer protections, California is leading the way and setting an example. California has taken proactive steps to prevent future abuses, such as passing SB 33. This new law is a deterrent to bad actors and a means of recovery for consumers, victims. We recently found that 3.5 million fake accounts were opened, a 70% increase from the 2.1 million sham bank and credit card accounts that was originally reported. I've been the victim of fraud and identity theft myself, so I know absolutely how jarring that can be. But being victimized by your own financial institution has to be even more disturbing. To add insult to injury, when the victim sought to hold Wells Fargo accountable, their path to the courthouse was blocked. Arbitration clauses were hidden in the fine print of the original contracts they had signed, sometimes many years earlier, to open a real bank account. The idea that consumers can be blocked from our public courts when their bank commits fraud and identity theft against them is simply un-American. With the fraud cases locked behind closed doors, Wells Fargo kept the scheme hidden from a broader disclosure, allowing it to mushroom. Giving victims their day in court allows them to recover and can prevent more victims by putting an end to these illegal business practices. I really believe that if SB 33 were law before this scandal, Wells Fargo would have been held publicly accountable years ago, and the fraud would not have claimed so many victims. It's a simple law. It covers activities of banks and financial institutions like Wells Fargo, and it prohibits mandatory arbitrations in the case of fraud and identity theft. The idea is to safeguard our most vulnerable citizens. Among those that were specifically targeted by Wells Fargo, listen to this, were the elderly, the working poor, new immigrants with a language barrier, and students. Companies will be on notice that if they commit fraud against a customer, they'll have to defend it publicly in a court of law. In that way, it can also help prevent fraud practices before they take place. Governor Brown's signature demonstrates that California won't sit back while our consumers get ripped off. I sincerely hope other states follow suit and that Congress maintains and enhances its own consumer practices. For our part, California will continue to look forward for ways to protect our consumers. Lastly, I want to recognize and thank all the consumer advocates and supporters for ensuring my bill was signed into law. I'd like to introduce one of those great supporters to say a few words now, Richard Holliber, Executive Director of the Consumer Federation of California. Thank you very much.
Can we have the treasurer first and then you treasurer Cisneros. Yeah, here's Treasurer Jose Cisneros of San Francisco. Thank you.
Thank you. Good morning. Hello, I'm Jose Cisneros, San Francisco Treasurer. For more than 10 years, our office and the city has been helping low-income folks in this city get connected with safe bank accounts, reaching out to folks who are unbanked, underbanked, and not being served well. During that time, we referred them to all sorts of institutions here, including Wells Fargo. So I was shocked to hear about the scandal of what the bank was doing. What Wells Fargo was doing was deceptive, it was wrong, and it's predatory. And I spoke out about it immediately, and immediately started talking with Wells Fargo to learn more about how this had affected folks here in San Francisco. We asked for how many folks had accounts open for them here and what was being done to provide restitution. We've stayed in talks with them, but we've yet to receive that basic information about what's happened here in San Francisco. And as a result, I announced that our Bank on San Francisco program that refers unbanked folks to places where they can get a safe account, we suspended the inclusion of Wells Fargo in that program. We can no longer be sure that folks will get safe, affordable accounts and have their money be kept safe at that institution. But we need this bank to turn itself around. We need to have a good partner to help folks get good, safe bank accounts, to keep their money safe. And that's what we've been trying to do. We've been trying to meet with Wells Fargo, trying to hold discussions with them, trying to make sure that they're taking steps to move forward and do the right thing. We've yet to learn that, and that's why we remain with Wells Fargo suspended from the Bank on San Francisco program. I look forward to working with everybody here in the city and in the state of California to continue to work to resolve this crisis and to get this bank back on the right footing. Thank you.
Richard Holliber from the Consumer Federation of California.
Good morning. You know, when you go into your bank to do business, you don't expect your bank to rob you. But that is exactly what Wells Fargo did to 3.5 million of its customers who put trust in the bank to treat them honestly, fairly, and take care of their banking business. But instead, Wells Fargo committed identity theft, committed fraud, and secretly, without the knowledge or consent of its customers, opened 3.5 million secret bank accounts. Now that should be a crime. We hope it will be prosecuted as a crime, but certainly when you are a victim of that kind of intentional deceit and fraud, you should have the opportunity to confront that bank in a courtroom. But because of clauses that were slipped into the original accounts that people opened that said any dispute you have with this bank will not go to a courtroom, but instead will be dealt with in a private system of quasi-justice called arbitration, people did not get their day in court. And to make it worse, it wasn't an arbitration clause that was about the account that you knew you were opening. It was a clause that said, anytime I ever have any dispute with Wells Fargo, whatever it may be, I do not have the right to go to court. Instead, it's handled through a private arbitrator, which is a license for that bank to defraud its customers, knowing it would never be confronted by them in a courtroom. Senate Bill 33, as a new law, will change that injustice and allow victims in a future similar kind of set of circumstances to get their day in court. And we believe, knowing that, banks will have a deterrent against that kind of conduct in the future. It's a very, very important protection for consumers. It's not enough simply to rectify that matter with that legislation alone. You know, when Wells Fargo was finally exposed and it said, we're going to come clean and we're going to be honest and we're going to open things up and we're going to allow a full investigation of all our wrongdoing, even as that investigation was taking place, the bank did not divulge to the investigators that it was engaged in many other forms of unethical and probably unlawful conduct, including opening 800,000 insurance accounts on people who took out car loans and who were already insured. You know, when you take out, for example, a mortgage, banks will typically say, prove that you're insured against a loss because we now are the owner, so to speak, of your home. And if you don't go out and get insurance, we're going to get it for you. And it's always a bad deal for the consumer. But it is almost unheard of for a bank to do this with a car loan, and particularly to do it to 800,000 people who were already insured. They got double insurance. They didn't know they were being insured by this other company. 24,000 of them had their cars repossessed. for overdrawing their account, not paying that insurance. So they have wreaked havoc on the lives of hundreds of thousands of their customers. And the Consumer Federation of California has petitioned the Department of Insurance to investigate this matter, and they have opened an investigation. And we know that the insurance company with whom Wells Fargo teamed, a company called National General, in California, their loss ratio for automobile insurance is 37%. That means for every dollar their customers pay, they only pay back 37 cents in claims. The industry average in California is 73 cents. So for all auto insurance, for every dollar paid in, they pay out 73 cents industry-wide. Wells Fargo's teammate only pays out 37 cents. Why? Well, we hope the investigation will determine why, but we suspect the reason why is nobody would go to this insurance company when they had a claim, because they already had insurance with another company. So that if they were in an accident, they would file their claim with the insurance company that they used. Meanwhile, this other company secretly had insurance on them, but no one came to them to say, pay the claim. So the problems with Wells Fargo go deeper and deeper. It includes fraud against military veterans. It includes lawsuits currently underway for ripping off people, small businesses that have merchant credit card accounts, and it appears there's no end in sight. So we are very thankful, first, to Senator Dodd for authoring and carrying this legislation, and we are thankful to Treasurer Chiang, who was the first in the nation when the scandal emerged to say, there's something we need to do, and that is to stop doing business, because our tax dollars should not be underwriting this kind of criminal activity. And we are thrilled that that has gone from California to a number of other jurisdictions who have ceased doing business, and we really applaud Senator Chiang for extending that sanction, because this is a company that needs to understand you can't get away with this kind of criminal activity. Thank you.
Thank you, Richard. Lee Harris, President-elect of the Consumer Attorneys of California.
Thank you. We're grateful to Senator Dodd and Treasurer Chiang for the more than 50 consumer and good government groups that supported SB 33 to hold Wells Fargo and other financial companies accountable in public courts in these situations. SB 33 reaffirms our rights to a civil jury trial when banks are at their worst. It's only when we can act in the open, and when people have a problem, they come to lawyers and they ask for help. And we need to be able to air their grievances in a public forum. All too often, people take the right to a jury trial for granted. We're standing in the shadow of the courtroom and the courthouse here, and when our country was started, one of the most important criteria, one of the most important protections was the right to a jury trial, because the people who founded our country knew there was no better BS detector than airing a grievance before a jury of their peers. And when people try to take away the right to a jury trial because they say it's more convenient or for whatever reason, my question is, what do they have to hide? Well, in the Wells Fargo situation, we saw what they were hiding. They were hiding a massive financial fraud that affected millions of Californians and people around the country. So it's clear that we need to keep the courthouse doors open. We need to allow people to air their grievances and to have the spotlight of public view that a case in a courtroom with a jury allows. Just a few weeks ago, Wells Fargo's CEO, Tim Sloan, appeared before Congress and reaffirmed that the bank will continue to try to use forced arbitration. That is, they're going to continue to try to hide what they're doing. And my question again is, what is it that they're trying to hide that we don't know yet? And that's why we need to have legislation such as SB 33. Thank you very much. So I want to say that all of us here in California are going to stand tall, just as we did for SB 33. We have a lot more work to do, and thank you all.
Next is Andrea Luqueta Kern from the California Reinvestment Coalition.
Good morning, everyone. My name is Andrea Luqueta Kern with the California Reinvestment Coalition. The California Reinvestment Coalition supports strong action by our state and local leaders to continue their sanctions against Wells Fargo Bank. CRC has 300 nonprofit members across California working in low-income communities, including communities of color and immigrant communities, all of whom Wells Fargo has directly targeted with their deceptive and abusive practices. As a federally chartered institution in California and headquartered in San Francisco, Wells Fargo has an obligation to center the needs of California's most vulnerable communities. The bank has been caught violating too many consumer protection laws for anyone to turn the other way. Strong action is needed, much stronger action than we have seen from this bank to date. It's far beyond time that Wells Fargo did the work necessary to make these communities whole. That must start with ensuring that every single person harmed has the right to pursue their case in court, and providing restitution to every single person who was charged a fee or suffered any other harm at Wells's hands. However, these are only the start. Wells Fargo must work with organizations to identify the entire impact of their actions, not only at the individual level, but at the whole community level where whole economies have suffered as a result of their actions. They must increase their lending, investments, and services in their communities to correct the cumulative historic impact of their actions and set things in the right direction. Thank you. Does anybody need comments in Spanish? Thanks.
And finally, we have got Byron Cooper, who is a victim of the Wells Fargo fraud. Mr. Cooper.
Good morning, everyone. My name is Byron Cooper, and I'm one of the millions who personally experienced Wells Fargo's banking fraud. I'm here today to personally thank all of those responsible for making Senate Bill 33 the law in this state. I banked with Wells Fargo for over 20 years, taking out student loans, mortgages, and trusted Wells Fargo fairly well after that amount of time. Up until 2014, when one of their bankers cold called me and asked if I would upgrade my checking account and to create some new accounts. I told her over the phone I had no idea who she was. I don't do banking over the phone, and no. She followed up with an email, and I responded clearly saying, do not create any accounts in my name and do not change my accounts. I was shocked to find several days later that, in fact, all of those changes had been made. I called the 800 number, and they said they could not change them back. I went into my branch, and they refused to do so, so I had them close every account in my name. I was outraged. I contacted some of the media here locally, and one of the stations did a story. They directed me to a consumer organization, Andrea, in fact, and she pointed me to the Consumer Financial Protection Bureau. That's the only place where I could file a complaint against them, and so I did that. A year and a half later, I was completely shocked to find the scope of the fraud. It was not just me, but many, many people over a long period of time. From these facts, it was crystal clear to me that Wells Fargo had absolutely no fear whatsoever to create false accounts and commit fraud against a 20-year loyal customer. So when I heard about Senate Bill 33, you know, I thought this was a restoration for those who are only motivated by greed and fear, to put some fear back into that equation. And so today I am here to thank those responsible, those leaders who stood up to very powerful banking interests and pushed this legislation through, and for our great leaders who not only pushed it through, but got the governor to sign it. So thank you.
Thanks. If the supporters who are behind would want to come up and just state their name and their affiliation, that would be good.
Name and affiliation.
Oh, sure. Petra de Jesus, San Francisco Democratic Party.
Peter Galata, San Francisco Democratic Party.
Suzanne Martindale with Consumers Union.
Noah Zinner, Housing and Economic Rights Advocates.
Samim Stockhill, City College of San Francisco President.
Tabitha Romero, Student Senate for California Community Colleges.
Ian Fregosi, Evolve California.
Rose Chan with Consumer Action.
Okay, we'll throw it open to questions for any of the participants.
I'm happy to say that the City of San Francisco, its Board of Supervisors, Mayor, and City Controller, and many of our department heads have taken action last year to cease doing business with Wells Fargo, and I look forward to continue to review that as we move forward. Thank you.
Any other questions from anyone else?
Well, we're going to continue to monitor the, as I indicated last year, I was very concerned about bringing in a veteran of 30 years. Would they be, as I stated in my earlier comments, a change agent? Thus far, he has proven not to be a change agent. There's been material omissions, material failure of actions on critical issues that impact all of us. We're going to continue to press hard upon the leadership of Wells Fargo, not only Tim Sloan, but also the corporate board of directors. And if we don't see action, we're going to call for, we're going to make additional demands of them.
Any other questions? Okay, well then, thank you very much.
Good job, sir. Thank you. I didn't know if you had a few minutes. I was just going to, or we can touch base later.